Welcome back everyone to Pete's Investing Updates. We review the weekly progress of some key share market world indices and gold. These are updated every weekend. If you want me to review an index or a commodity, put it in the comments and I'll cover it in a future video. As always, click on the subscribe button and like this video and the notification bell to support this channel. So let's review some, also we're going to review the playlist, and this is where we review the indices are posted each week and also review some blue chip shares. And this is also where we post our strategies, and for those strategies please reference these videos in terms of explaining how we go about using the simple trading strategy, the average down process, and some money management ideas. Let's now go to the first chart, which is the ASX 200. So just a couple of things to note here. We're trading roughly on for each of these charts, we're trading roughly on a 5-month timeline horizon. It's a 15-minute chart. And we're taking a snapshot, so the positions are, this is all theoretical trading, but they're real results. In other words, we're taking as a snapshot. So if we assume we're opening the trade back here, and this is what that would have accumulated had you opened the trades back here. So the new trades start here. So as we add a week here, we lose a week here. So let's get stuck into the analysis of this week's trade for the ASX. You'll notice here it's had a good rise this week compared to last week after opening on Tuesday. The CCI broke above the zero, and that's one of our entry criteria. So it remains open as yet to reach our minimum profit margin. Now the way that profit margin requirement is, so in other words, it hasn't closed out here when the CCI drops below the zero, which is one of our closure criteria. The profit margin needs to go above our minimum level, and that's calculated by this little indicator I've put in there. So if you look at this value up here, between that value and that value there, you'll see there the target price is 7344 with an incremental points range of 36.6 points. What that means is over the last 100 days or 100 bars of trading, the average price was about 36 points in range. So we're looking at getting that range at least before we close out. So that there indicates our target price, and that's 7344. So if you put a 7344, if you look at the value over here to where our open was, our 7344 falls just about there. So we need to get to that level at least. Plus we need to see the CCI indicator drop below the zero. So it's reached that beyond that profit level already, as you can see there. It closed out there late Friday, but the CCI, if you can look at that up here, that's yet to break below the zero. So again, we need to break that level of profitability at least, and once that drops below the zero, that's when we close out the position. You can see here that last week's example, we opened up out here. If you look up here what the target price would have been, 7201. So 7201 calculates, and again if you're looking at over here, 7201 is there. So you can see there the price did go above the 7201, which was here. It did close above there, but notice here the CCI has kept remaining above the zero. Price kept rising. It touched below the zero. It probably just touched below there, but it didn't actually execute. And that's why, sorry, it did execute, and that's where it closed out the position, hence the close. So it's our strategy for hitting our target. It needs to reach our minimum level, but also the CCI needs to run its course and break below the zero before we close out. So that just demonstrates our closure strategy. Next we look at the US market. You can see here the price has moved above last week's range, and it's actually bounced off that key support resistance area most of the week, and then it closed above it. So again, this position has remained open for a couple of weeks now, almost 2.5 weeks. It's not far from closure. So again, it needs to hit our minimum profit margins, profit levels before closing out. So it's probably not far off that as it opens in the coming week. If you look at the FTSE, our next index, this closed out early this week. Again, it opened up back here. Our target price was 70.50. So again, 70.50 is there. You can see there it kept that below that 70.50. The price did go above the 70.50, but the CCI remained above zero. Hence, when the CCI broke below the zero, it still probably just kissed the exit levels, but then it fell below, so it didn't close out. The position remained open, bounced below our minimum target levels, and then it finally went above our target levels of 70.50, and the CCI fell below the zero and it closed out. But again, the position remained open in this week's opening, and it still spiked up late Friday. Next, we look at Germany. Similarly, this bounced along a similar sort of price range to last week's trading in this range here. It hit off this support level. The positions remained open because it's gone pretty much flat. It has closed out here first off early in the week, then it opened up again back here. It's dropped below that and it spiked up again, so positions remain open. So that's still trending okay so far. If you look at China next, China continues to trend down this week, approaching a new minor support level down here. So as you can see there, it's hit this support level. It's bounced off it a couple of times. Hopefully it bounces back up, but let's keep it open and just watch our positions. This is the only one that's causing us grief at the moment of all the indexes. Lastly, we'll look at gold. This is traded down from last week, again hitting this key support area. It's bounced off it a couple of times, and again this is causing us some level of grip, but nothing too serious. We're still in profitability on this one, so no additional average down positions have been added. Let's review the summary table of results of income. So these are the margins required per each contract as you trade these in CFDs. This is the profitability gained over the 5-month period, the maximum drawdown required from each of those trades, and the approximate monthly income, which is basically that divided by 5. It's about $2,700 a month in income if you traded 5 contracts. Remember, we're trading for each of these. We're trading 5 contracts in each of these theoretical trading examples. Okay, that's the indexes and gold this week. Again, don't forget to hit the subscribe button, the like button, and the notification bell to get future update notifications. And I'll speak to you next week. Thank you.